India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming out of a holiday-shortened week, it looks like we're coming out of a long weekend. It was not. Friday was working, but Thursday was not. So I think it's kind of looking like one of those. This is a fresh new week. Markets are looking good after Friday's big rally. We're coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Mangalam is here today with us. Guys, good morning.
Morning.
Hi,
I was
morning.
one of those lucky people who happened to get an approved leave on Friday, so made
He did get the long weekend.
4 days. That was me. And coming after the results season, budget and all of that heavy period, it looks like we're in a beautiful space right now, just calm. Markets are doing well. Monsoons are good, weather, everything's fine, and we're on set of the festive season.
Yeah.
So nothing can go wrong, touch wood.
The thing is, when you work 4 days a week, 5 seems long, but then we get back to it, and it's just par for the course. But in that holiday-shortened week, markets had a rollicking ride, a huge pullback, right? And I think the question this morning is whether we'll see more of it, or whether that extreme sort of yo-yo effect of down and then up, whether that's out, and then we get into some sort of an equilibrium.
I think it's the former, not the latter. I think it's past. I mean, the big sort of events, and I think it's not something we will easily, forget. And we're talking about, of course, the 2nd of August, 5th of August events. But there's been no, it's not ricocheted back in any shape or form, that big week. But as always, let's begin with what you need to know as we begin another day, another week. So Friday was excellent. You essentially had a 400-point Nifty rally, and that in one session took us past beyond the 20-day moving average. It looked a little iffy. There was even one sell-off early on. In the first hour, the market actually gave up about 100 points, and then it picked up pace and continued higher. It then sort of crossed the 20-day moving average and kind of stayed above it for bulk of the session. The 20-day, of course, at about 24,480 or so. I'll get to levels in a bit. Now, S&P 500 on Friday, no real surprises, a little higher, about 0.2%, and NASDAQ about 0.2%. You had the 10-year yield in the US, which is now kind of steadying at about 3.88. It was down about 3 basis points. The dollar index has seen a big sell down. On Friday, it lost about 0.6%, and we're at about 102.4. So this is good news for emerging markets in a risk-off environment. Caused by sort of global uncertainties or a fundamental shock, etc., the dollar tends to appreciate because people sort of rush back home. But for emerging markets to do well, you want the dollar lower, not higher. Spot gold, it was a blink and you'll miss kind of moment. It hit $2,500 on Friday, and this is something which is interesting from an India perspective as well. And we'll talk about that. All these jewelry stocks have done phenomenally well. Of course, the gold financiers are not doing too badly either. Second-tier data in the U.S. on Friday was a mixed bag. You had housing starts, which were soft, and the University of Michigan sentiment indicators was a little better, although the inflation component there hardened a little bit. Markets this week, as we go into the rest of the week, focus on this Jackson Hole Symposium where central bankers will speak. Of course, you'll have lots of them speaking. The highlight, the main event is Powell's speech, which is only on Friday. That is still, some time away, end of the week, essentially. So where does all of this leave us as far as, levels are concerned? The Nifty is now beyond the 20-day moving average, which is, as of Friday's close, at 24,477. And that's the first level that the market needs to stay above. Respect. That's essentially a very important short-term average, always on the way on a break down and on a break higher. I would say that, and I was saying this on Friday morning, sentiment got extremely overdone negatively in the very, very near term. And that kind of met, of course, Thursday's big Wall Street move, and you got the Friday session. But I think you look around you, dollar is down, yields are well behaved. Global markets are kind of getting back to a more stable zone. I'm not saying it's a up and up kind of a session, but I think, the worst of what we saw starting the 1st of August, that 1 week that is not sort of coming back to us in any big way, at least not right now. So the immediate resistance for the Nifty is the upper end of the gap level. That's the sort of global market caused gap around the early August period. That is 24,686. So that is that's the next target for the market. And of course, beyond that, you're looking at that 25,078 level, which is, of course, the all-time high. Supports, of course, for the Nifty come in around the 24,100, where the market has taken support many times in the last 10 odd trading sessions or so. So 24,686. And after that, we'll see if the market wants to sort of continue in an uninterrupted fashion. Supports at 24,100. The Nifty Bank had a very nice rally on Friday. It's the weaker of the two indices, but it's yet to hit its 20-day moving average. So that's the first level. That's 50,922 for the Nifty Bank. It's about 1% away. Immediate resistance after that is, before that level is 58.30. That is a swing high for the Nifty Bank. And then, of course, you get to the 20-day moving average. Support for the Nifty Bank comes in at the 50% retracement of the move, which essentially is at 49,717. Again, a level which the Bank Nifty has spent a lot of time over the last fortnight or so trading around. GIFT Nifty will come up on your screen. I think it's a higher start, 70-point higher start. And we are going to start, I think, around, if these numbers hold, around that upper end of the gap level, which is about 686 or so. But that's essentially the GIFT Nifty. The spot, of course, will also be tracking that. But it's a higher start, and hopefully we continue to build on top of that through the course of the day. Surabhi.
Prashant, I'm just wondering, this time at Jackson Hole, what will the central bankers talk about? Hey, are you cutting? Okay, wait, I'll go on hold. Well, I won't go up. You're going down. We'll go in this together. So I don't know, maybe a little more interesting than usual, that symposium. But only at the end of the week do we start getting the headlines from there. The Asian markets this morning, they're actually off to a bit of a quiet start. So if you look at most of them, Japan and even the Chinese markets, which are trading right now, a little bit of red. So a bit of a consolidation as we kickstart the week. The machinery orders data out of Japan, that's missed expectations. So it's kind of keeping the bulls reined in as we kick off. Anyway, to sort of wrap up last week and the extent of the moves that we saw, the ferocity of the pullback. The S&P 500, 3.8% higher. US tech pullback. If there were any naysayers, they were completely stopped in their tracks, because look at the Nasdaq up 5%. The Dow was okay, around 3% higher. The Nikkei pulled back 7.9% last week. Again, I'm just putting the numbers on the board to sort of put in context the ferocity of the move on the other side as well. As a contrast, the Nifty moved up only 0.5%. So is there going to be more of that recoiled spring effect that plays out here for our markets? The distance from the peak, just to again put the numbers in context, Nifty is about 2% away from the all-time high. Mid-cap index is about 3% away. The small-cap index is a little over 4% away from the all-time high. And the underperformance of the banks, so the Bank Nifty is around 5% away from its peak. The fund flow situation, well, we had FIs on the buy side on Friday. So will there be more of this, if this is a trend reversal or not? We need to track. But this is after many, many days of consistent selling. Do we have a small buy figure, 766 crores? Domestic institutions, as usual, were buying 2,600 odd crores. Now, some numbers have come in on the domestic front. The situation for banks and the fight for deposits, that's really telling, because the latest data that's come in, the fortnightly data that we get from the Reserve Bank of India, this is X of the HDFC merger impact. Credit growth is running away at about 13.7%. Deposit growth is lagging as usual, 10.6%. So the gap remains. And even if you include the HDFC merger, then the deposit growth is 11% and the credit growth is 15%. So there's a fair amount of gap. So let's see. That's something that's been an overhang on bank stocks. We'll see how the reaction is today. There's lots of manufacturing news and good news, actually. So there's Escorts Kubota. They are looking at a big investment, perhaps in UP. That's where the talks are on land acquisition. 4,500 crores is the amount that they're looking to put to work. And then watch out for a lot of the railway and metro infrastructure stocks, the likes of BEL, BEML, and even L&T, etc. People who are involved in the construction of metro projects, because the numbers are pretty big. This was all cabinet approval coming through. So Bengaluru is 15,600 crores, Thane Metro is 12,200, and for Pune Metro, the expansion project, it's about 3,000 crores that has been approved by way of investment. So tendering will start. So expect some buzz around this side of the market. So I think we're back to looking at Q's earnings season has drawn to an end. And by the way, there's a big split. We'll talk about this as we go forward. Big split between brokers and the way they are calling it. Morgan Stanley seems to be the most bullish at the end of the first quarter results season. There are others who are turning a bit skeptical about the pace of earnings growth. More on that as we go forward. GIFT Nifty is pointing to a positive start. But as I said, Asia is a little more cautious this morning.
Well, Asia is a little more cautious. What's actually interesting is that if one uses the holiday, analogy itself, are we taking off or is it just taxiing? That's the big question, right? Because the reversal happened from extremely oversold zones. The rally happened towards levels where we're closer to congestion zones. So that's the big question, right? Is it a reversal from lower levels or something has fundamentally changed? Because if you discount even the August 5, August 6 lows on the Nifty, the budget day low was 24,074. August 8, thereafter, the low was 24,079. And August 14, one day before, where we saw that big move, the low of the Nifty was 24,099. So those are lower levels which the market is respecting. Two things can change that. One, the IT index. Nifty IT index led the charge on Friday. In fact, the Nifty Bank did well, but the IT index was actually up 3%. An improving US outlook supports that sector. That's also the sector where, if you made a Venn diagram of valuations, having not done anything else, and improving prospects with lower multiples, maybe the common shaded area would be the IT pack. So that's something we'll be watching out for. Yes, the flows returned on the cash side, both the DIs and FIs bought, but also there was purchase of 2,300 crores in index futures. The prior two trading sessions, the FIs actually went net short on index futures. So some of that was, unwinding of those short positions as well. So if you look at it, they added about 18,000 long contracts and covered 16,000 short contracts. So if you look at the last three trading sessions, on August 13, the FIs went net short to the tune of 21,000 contracts. Long positioning was 48%. That increased a little bit to 30,000 contracts. Again, long positions went down to 47%. And that up move has led to some of those shorts being covering their positions, longs being added. So net contracts at 4,000 contracts. At 50%, it's an even keel yet. The 24,200 call writers covered their positions. 24,500 put writers also wrote some contracts telling you that there is support which has moved higher to around that 24,400, 24,450 mark. But on the way up, 24,800 call writers are still active, telling you that the earlier congestion of the Nifty, which is between 24,800 and 24,850, may continue. So if you just had to look at the range on the Nifty, maybe the 20-day moving average is a lower level. Prashant did point that out. 24,477 would be a support. On the way up, 24,800, 24,850 is the congestion zone that we need to navigate before we go to all-time highs. And what is it that can take us to all-time highs? If the Nifty Bank goes past its own congestion level of 50,900 to 51,300, that 400-point band, because that's where rests the 20 and the 50-day moving average. Apart from the IT sector, I'm looking at Birlasoft as a stock today. Why? Because one, IT stocks are doing well in general. That stock was 6% higher and also got out of F&O ban. So that's something that could be on one's radar.
All right, Mangalam, thanks very much for that. So IT absolutely has been doing well. And if US stays as it is, which is by the way, the S&P 500 is just 2% away from its highs. That's quite something, right? Just like that, in a fortnight or so, we've seen so much. Lynn Alden is founder at Lynn Alden Investment Strategy. She's joining us right now to take some questions. Lynn, great to have you with us here on CNBC-TV18. Prashant this side. Now, just sort of your own framework at, everyone is kind of talking about whether what we saw early August is firmly behind us and we are once again back into more sort of trending up and up kind of markets. What's your sense, Lynn?
So first of all, thank you for having me. I think one of the major things to focus on is the upcoming Jackson Hole Symposium and some of the potential moves that the Fed could be making, because in addition to affecting U.S. markets, it can affect global markets. As you mentioned earlier in the program, the dollar index is a really strong variable for that. And the base case going forward that the market is pricing in is a number of gradual rate cuts in the quarters ahead, which should relieve burdens, especially for various markets that have a lot of dollar-denominated debt. That's one of the main mechanisms where that weaker dollar, or at least that like somewhat softer dollar, should be supportive. So I think we have to watch if there's going to be follow-through with those actions.
Lynn, hi, good morning. So do you see the environment continuing to be conducive for risk assets? Because I think everyone's agreeing that the Fed will cut. It's just a question of the pace and the timing. Is the worst of the yen-related volatility, is that behind us?
So I think we shouldn't expect the type of performance we got last week. I think we have to be a little bit more cautious after the rebound. I don't specialize in predicting very short-term moves. I think we're still probably going to see some periods of volatility. One of the things I'm tracking a lot is that I don't particularly think that the rate cuts we're going to expect in the U.S. are going to be very effective for the U.S. economy. So the U.S. economy is softening. A lot of the debt for both consumers and corporations is already locked in at fixed rates lower. And there's only some parts of the market that have, variable rate debts or other kind of high rate debt. And so I don't think 50 basis points or even 100 basis points is going to be particularly effective there. But I do think that that could be meaningful for the dollar relative to other currencies. And so actually some of the areas that could get the biggest boost from a softer Fed are the emerging and frontier markets of the world. So that's kind of where I'm monitoring to see if that thesis plays out as expected.
Well, Lynn, if one's belief is that it's about when the US cuts rates and not if, do you think emerging markets would benefit? You don't see it doing much for the US economy on the whole, but if emerging markets were to benefit, if that's the thesis, then would it be India or would it be others because of the outperformance that India has already seen?
I think it'd be a number of them. It could very well be outside of India because India has less dollar-denominated debt as a percentage of GDP. So that particular variable is less impacted. There's more other factors that have been going on. Instead, I think we could see some kind of catch up from some of the emerging markets that have struggled as of late, particularly Latin America, for example, other parts of the world, and you can get kind of a virtuous cycle there. So there, when capital pulls out of emerging markets, it goes into the dollar and other kind of areas like that. It strengthens the dollar and therefore puts pressure on their debts. But when the dollar softens and eases their debt, it eases liquidity conditions in those types of economies, and then it can attract more foreign capital, which ironically can weaken the dollar further and strengthen those currencies a little bit further. The most useful comparison to be aware of is that kind of 2002 to 2007 period. After the U.S. Went through its dot-com bubble, we had a fairly mild recession in 2001. We cut rates, and that the biggest benefactors, I mean, the U.S. housing market did well, but the biggest benefactors were emerging markets for that next kind of 5-year period. And I think that we could see, maybe not to that extreme level, but I do think that we could see that kind of leadership, and that's the kind of rotation that I'm looking to see if that starts to confirm itself or not.
Lynn, do you look at emerging markets? Do you look at India at all? Any views here?
I do. I've been structurally bullish on the Indian stock market for years. Given the specific dollar focus and how we could get dollar relief from some of the markets that have not done well, I do think that there could be a period of time where, for example, Latin American equities have my attention at the moment because they're the ones that would potentially benefit the most from, say, the dollar index falling by a few hundred basis points. But I'm structurally bullish on India. I'm structurally bullish on more cyclically bullish, I would say, on parts of Latin America, as well as certain frontier markets, other parts of Southeast Asia.
All right, Lynn, we'll leave it there. Great conversation. Thank you very much for being here on CNBC-TV18. Appreciate your time here. Well, let's move on and take a quick commercial break. Before we do that, let's quickly run you through some more opinion. This time it's coming in from Rajiv Batra of JP Morgan. Remember, we were talking about first quarter earnings, and this is a view on that. So Q1 earnings, Rajiv says, were lackluster with a moderate pickup in revenue growth and margin expansion. Lower input cost benefit is largely getting behind us as anticipated in the previous quarter. He says factors such as limited government expenditure, relatively higher base in the previous year, demand fluctuations and rising competition were also a key drag. He adds domestic cyclical segment fared better as compared to global cyclicals. Near term, he's expecting the market will remain range bound due to rising domestic headwinds and global market volatility as well.
Amish Shah of Bank of America Securities says the consensus expects Nifty FY25 earnings growth to moderate to 10%, led by slowing growth across energy, financials and discretionary. Although he sees downside risks as a slower first quarter implies 14% growth for the following 9 months of FY25, he believes that potential beats in auto, industrials, healthcare and IT may not be enough to offset the misses in financials, metals and energy. Besides, he adds that slowing global growth is a risk in itself.
Okay, some money market views as well. Kunal Sudani of Sharon Bank says that dovish Fed expectations and a positive risk tone keep the US dollar bulls on the defensive. The dollar index may find immediate support at the 101.8 levels, while the 103.2 is a resistance. For the USD INR pair, he says 83.75 to the dollar acts as a support, while 83.95 is the resistance.
On bonds, Vishal Goenka of IndiaBonds.com says volatility in global markets continued to subside, with the US CBOE VIX closing below 15 on Friday. This week, he says the main global focus is going to be on the Fed chairman's speech at Jackson Hole, as well as geopolitical news around Israel. He expects bond yields to be in a holding pattern for the 10-year in a trading band of 6.85 to 6.9%. All right, we'll take a quick break on that note. Up on the other side, our list of top stocks to watch this Monday morning. Welcome back. Lots of stocks to track as usual. Earnings season is over, but the news flow is not. And our research team is standing by to get you the CNBC-TV18 list of top stocks to watch. Kicking it off with Maruti. Sudarshan, morning. This was interesting. They're making a provision because of some mutual fund related taxation. Really caught my eye. Tell us more about it.
Morning, Survi. So first, as far as color is concerned, I'm going with red for Maruti just on the basis of news, but stock may see recovery during the day. Now, coming to the news, company says its Q2 profit will see one-time impact of rupees 850 crore. That is 24% of Q1 profit and 6% of FY24 profit. Now, coming to the details of the news, company used to make provision for deferred tax liability on debt mutual fund investment gains. Now, if you remember in the budget, FM had announced that removal of indexation benefit and tax rate has been changed from 20%, that is with indexation, to 12.5% without indexation. And because of this, company is saying that in Q2 profit, it will see one-time impact of rupees 850 crore. And that is LTC's long-term capital gains. An actual payment of tax will be made at the time of redemption of these mutual funds. That company, when it's going to make the payment, that is redemption amount, that time it will see the one-time impact. So overall, one-time impact of 850 crore in the Q2 profit that company is likely to see.
Oh, okay. All right. Got it. It's a sizable amount, 850 crores. Manglam.
Well, 850 crores. We'll keep an eye out on that one. But I'm looking at electronic marts as well. But before that, let's go across to Vamakshi, who joins in on Voltas. They held a conference call and a lot of brokerages have written on that. Vamakshi, good morning.
Well, good morning, Mangalam. Let me first start off with Nomura. They've gone ahead, maintained a buy rating, raised their target price to 1,857 per share. The management in the con call said that for the room AC segment, better channel planning and not the discounts helped the company gain market share in the segment. They target to retain high single-digit EBIT margins as well. For the project business, they say that they've received favorable arbitration for FY23 provisions. However, they are cautious on some of the new orders. They, however, believe that EBIT margins of nearly 4 to 5% should be possible over a cycle. So given those factors, Nomura has gone ahead and maintained its buy rating and raised its target price. But apart from that, we also have a note coming in from UBS. They too have a buy call on this counter. They've gone ahead and raised their target price to 1,960 per share. So given those factors, going with the green for Voltas.
All right. Thanks very much, Vamakshi, for that. Voltas is something which has done well last week. I mean, I think on this Wednesday, where the stock went up sharply. Friday was a bit quiet. GMR Airports is the next one we're going to focus on. Vivek is here to tell us why. Vivek, morning.
Well, good morning. GMR Airports is in focus. The company has given the July operational update in terms of, number one, how passenger traffic spanned out and how many aircraft the company actually handled. Along with that, the company also gave an update regarding, the T1 terminal. So first up, looking at the passenger traffic, it crossed 6.3 million passenger, which is up almost 7.7% on a year-on-year basis. It's largely flat on a month-on-month basis. Domestic traffic up 6.6% and international traffic up almost 11%. Now, the company says Terminal 1 is now fully operational and back on track. And along with that, when you're talking about the aircraft that the company handled, it's 68,755, which is up almost 6% on a year-on-year basis on the back of the upflow going with the green on GMR Airports.
All right, Vivek, thanks a lot for that. Going with a green on GMR Airports. Let's talk about electronic marts. If you look at the stock on Friday, there was a large trade that took place. The stock ended higher by about 3% as well. And now we have the participants of that large trade as well. Nearly 8% equity changed hands. It was the promoter entities, Karan Bajaj and Pawan Kumar Bajaj, who sold about 7.8% stake, and the buyers were SBI MF, which bought close to 4% stake, and Norges Bank was the other one, which bought about 1.75% stake as well. As of June 2024, the promoters held in the company close to 73% stake, so that comes down to about 65% stake. But the reason I'm going with a green on this is because, one, the sale of 8% was easily absorbed by mutual funds. Also, the stock has seen a big move, 2x in the last 12 months, 4x from issue price of 59 odd rupees, and they have a fair amount of triggers going forward as well. Q1 was a strong one for them, and also they've got continued leadership in South India. Increasingly, they are adding new stores in North India, and increasing share of revenue and improved operations from North India would be something that would be further growth triggers for electronic marts. So the last 1 month up 6%, last 12 months has doubled. And we'll have the management later on the show to discuss more about the performance of the company going forward. There you have it, 83% of the last 12 months.
All right, that's interesting. And the consumer durables as a space also, what you heard about Voltas and other stuff is coming back. At least that's the hope. Let's also talk about oil companies, ONGC and Oil India. Sonal is here with that one. Sonal, morning.
Good morning, Prashant. Well, the fortnight review has come by, and windfall taxes on crude oil production, that has seen a big cut. It has been cut to 2,100 rupees per ton on crude oil production from 4,600 rupees per ton. This is because of the fall that we saw in crude oil prices during the month of July. However, the export duty on ATF, diesel and petrol continues to be nil. It has been that case for months. So ONGC and Oil India, those two stocks will be in focus. This ensures their realizations remain above that $75 per barrel mark.
Right, Sonal, thanks a lot for that. Let's talk about Techno Electric and IndiGrid. Vivek joins in with the updates on those.
Well, that's right. So Techno Electric as well as IndiGrid, both of them will be in focus. A very interesting development, actually. So now Techno Electric has actually gone ahead and partnered with IndiGrid, and this is for the development of 2 interstate transmission system projects, now which was actually won by IndiGrid. So Techno Electric, number one, will co-develop and invest in both of these projects. Techno Electric will also have an equity portion in this particular project. Role of Techno Electric will actually be that it will be responsible for the complete execution of the projects, and this is being done on a lump sum turnkey basis. Going with the green on both of these stocks, it's a positive development given the fact that it actually enables IndiGrid to go ahead and aggressively go ahead and bid for more transmission projects.
Okay, all right, got it. Thanks very much, Vivek, for that. Back to Vamakshi. Vamakshi, you're watching out for Siva Cements and I think Genus Power. What's the news here?
Well, absolutely. Let me first start off with Shiva Cement. GSW Cement has filed for a 4,000 crore IPO consisting of fresh issue of shares of nearly 2,000 crores. But why does this bode well for Shiva Cement? And that is because GSW Cement is the promoter of the company. It holds just over 66% stake in the company after it was and in fact it acquired this stake in Shiva Cement in 2017. The company also supplies clinker, which is a key component in cement production, to GSW Cement. So overall, with the DRHP being filed, it bodes well for Shiva Cement. Genus Power is the next one I'll be watching out for, going with the green for this counter as well, because it has signed 3 LOAs worth almost 3,000 crores, and with these recent orders, the total order book for the company exceeds 24,383 crores. So overall, going with the green for Genus Power as well.
Okay, all right. Thank you very much, Vamakshi, for all of those details. Those are all the stocks, but commodity cues as well. And guess what's making headlines? It's really gold over the weekend, right? Manisha is joining in with a roundup. Manisha, good morning.
Morning, Sylvia, and absolutely gold hit an all-time high at $2,500 an ounce and above that as well. We have seen some profit taking right now, while of course, the strong safe haven demand will continue, but the markets do read into the Qatar urging Iran to de-escalate tensions with Israel, and that's led to some profit taking in gold, silver, and in crude prices also. The markets will watch out for the U.S. Fed rate meeting minutes that would be released in this week itself. Not just gold, we also have seen the crude oil prices after hitting a 2-week gains and 2-week highs also come off the market. OPEC and IEA both have lowered the demand growth forecast for 2024 and first half of 2025. That seems to be weighing onto the markets right now. But the bright spot also is in silver, which gained 3.5% in the previous week, and copper prices, which gained 2.5% in the previous week. So metals as a whole, the industrial metals that is, seem to be holding on a firmer note in Chinese markets right now.
Okay, all right, Manisha, thank you very much for that. We'll watch out for that sparkle on gold if it indeed is going to continue above $2,500. Take a quick break. We'll come back on the other side and we'll have market expert Prakash Diwan joining in with some fundamental stock ideas.
Welcome back. You're watching us here on Bazaar Morning Call. In case you've just joined in, it looks like a good opening for the market. A 75-point uptick is what the Gift Nifty is indicating. Let's welcome Prakash Diwan joining in on the show now. Prakash, good morning. All the durable makers are in focus this morning. There was a conference call that Voltas held, and then all the brokerages have gone ahead and upped their estimates. There was a large trade that took place on a durable seller, Electronics Mart. I'm not sure whether you've tracked that or not. What are your thoughts on EMIL, and do you have thoughts on Voltas? Any particular consumer durable stock that you like?
Good morning, Mangalam. So, I think interestingly what the Voltas commentary mentioned, and I'll take that first, it's about, them being able to manage to grow, continuously grow, even if it is going to be a bit lumpy going ahead with decent margins. Because what we've seen in this earnings season is that there has been, wherever we've seen retention of margins, volumes have taken a backseat. And wherever we've seen some companies clock decent revenue growth, margins have been kind of compromised. So, that's the interesting part in this space. And to be honest, it's not something which has run up so much, as compared to cap goods or as compared to staples and all of those. So there is definitely some room, some comfort there. But overall in the market, if you really ask me, I'm not looking at buying or adding anything till the peaking out happens, and which in my understanding is going to coincide with the first announcement of the US interest rate cut. So as and when that happens, probably is going to be the peak of the market for some time. And then we'll probably review it. But on the basis of the Voltas commentary, yes, consumer durable segment as a whole looks promising, but there's nothing which is outshining in that sense or attracting us to buy from that segment yet.
Got that, Prakash. Any thoughts on on Zomato? We're going to talk more about this. You must have seen that tweet about highest ever orders over the weekend, and there's a call as well from UBS comparing where Zomato is trading at as compared to some of the consumer names, and how it's more attractively. I mean, it's a little expensive, prima facie, but on other matrices, as I think the brokerage is pointing out, it's doing a lot better. Your thoughts here?
Good morning, Prashant. No, so you're absolutely right. I think Zomato has morphed from being treated with FOMO to actually something which people want to buy from a momentum or a growth perspective. Now, if you are willing to live with certain downsides which could intermittently happen in the next 4 or 5 years, the kind of market size and the market share that Zomato takes thereof is going to be significant. So this is a classic, and I mentioned this some time back when it started making profits and things were evident, but then everybody will say I said so. But today, if you were to stick your neck out, it's a gorilla theory. In a world of monkeys, there's one gorilla who's actually likely to become so big and significant that they will command premium, not just on valuation, but even on pricing. And I'll tell you where the pricing is coming. The Blinkit model has given them so much of data richness that they are able to work with OEMs in such a simple way, the principles, and tell them which PIN codes matter and what times of the day matter, what days of the week matter. So all of that data is going to really help them fetch a lot of onboarding premium. So I think it's a great story in the making. If you will, you could add on dips, but even otherwise at these levels, it does offer that growth momentum that you could ride for the next few years.
Yeah, you're right. Actually, data is the new gold, and these platforms have all the possible data on when I'm eating, when I'm sleeping, when I feel hungry at night, and where I want what delivered. So take your point; it's pretty fabulous, the wealth of information that they have. Prakash, stay on. We want to discuss autos as well, and for that we also have a guest joining in. We have Jay Kale with us to talk about the disruption that seems to be happening at the entry-level segment. Now, Ola announced the company's foray into the electronic motorcycle segment with the launch of the Roadster series. The bikes are, there's a range for different bikes. The portfolio has 3 different models. The starting point or the starting price is 75,000 rupees. So what does this mean for the entry level motorbike segment? We have Jay Kale with us. He is from Elara Capital. Jay, so we all saw the bikes last week. And, I'm just going to go back a couple of weeks earlier when Bajaj Auto was really trying to, take the competition head on here with their hybrid launch, right? And they were saying that they want to make inroads in that sub 125cc segment, which has traditionally been a very stronghold for Hero Motor. Now you have Ola with this new challenger at 75,000 rupees. What is the kind of disruption? What are the kind of market share shifts that we're potentially looking at?
Yeah, good morning. We've had these launches from Ola, and we've seen in the EV segment, EV two-wheeler segment, till now the disruption has happened, or the penetration increase has happened mainly on the scooter side. Motorcycles to a certain extent, that from the consumer standpoint, is a little different customer profile. We've had, scooters, the average daily running is relatively lower. Just about 20 odd kilometers per day is what the industry standard is. Whereas motorcycles, they are much higher. Motorcycles are used much more in the semi-urban and rural areas. So that requires a higher range, more rugged motorcycle. And one needs to see how the this EV motorcycle, while the price is attractive, whether it ticks the other boxes of the customer profile of motorcycles, which is kind of different than what a scooter customer profile is. So yes, the price is attractive, but one needs to see how the acceptance of this product is from the different customer profile.
Jay, but you'd agree, right? I mean, when we talk about two-wheelers, right, it's mostly motorbikes. Scooters is a very small segment, and Ola was in scooters so far, and now they are coming into what is the bulk of the two-wheeler market, which is motorcycles. So in that sense, it'll cause some ripples. We don't know, as you said, adoption with a product and all of that, of course, but it's out there now.
Yeah, definitely. Scooters is 33% of the overall industry, two-wheeler industry. Motorcycles is the bulk, like you said, 60-65% of the industry is motorcycles. Till now, we've had historically just one player, Revolt, which was mainly into EV motorcycles, but that did not pick up as well as what one would have thought of. So one needs to see, like I said, the customer profile in motorcycles is totally different than a scooter customer profile. And, while price is one aspect, definitely it will, push the other OEMs. It will seriously nudge the other OEMs to launch their versions of EV motorcycles as well at a particular price point, which actually happened in the EV scooters as well. Because of the startups pushing, the incumbents also now are ramping up on their EV scooter portfolio. The same could happen on the EV motorcycles as well. But like I said, while EV scooter penetration,
do we already know? Have you heard from all these companies, TVS, Bajaj, Hero, etc., about their EV motorcycles yet? In their calls and.
No, they've spoken of product launches in the EV scooter side. I'm pretty sure they will be working, in the background for EV motorcycles as well. Nothing that has been spelled out in the public domain in terms of when their launch pipeline is.
Well, Jay, I just wanted your thoughts on Ola Electric Mobility as a stock itself. Ever since the IPO, the stock has rallied, 75, 80 odd %, nearly doubled. Market cap close to 60,000 crores. Yes, fundamentally, everyone's looking at the electric vehicle story and they are making announcements to that extent as well. But how much do you think is a function of the way the market forces are right now and how much of that is fundamental? The reason I say this is because I'm just looking at the number of locked in shares. 83% of the outstanding equity is locked in. It's just 17% of float which is available for trade. That causes a big move in, the number of shares which are bid for versus the price at which the stock comes at you. What are your thoughts on the stock fundamentally at 60,000 crore market cap and a big move that it's already seen?
Well, I think absolutely. You spelled it out rightly that there is this liquidity thing. 83% is locked in, and that's why you see quite stark movements. In the initial days of the listing. But there are positives and there are negatives. Of course, being the positives, they are one of the leaders in terms of electric scooters in the country. Their ramp up has been pretty impressive. In a very short span, they have ramped up quite well on the EV two-wheeler side, and now they are going ahead with the EV motorcycles as well. But one needs to be cautious about their cell venture as well. Globally, cell prices have crashed. How much of a benefit will that cells be for their internal consumption versus peers? That needs to be looked at. The cell, stability in terms of yields is also something that needs to be looked at. And hence, once the cell manufacturing comes on full stream, how much of that really gives in terms of cost advantage is something that is, still, execution is one of the key risks for Ola over here on the cell side. On the two-wheeler side, they've relatively done better off. But cells is something that will be keenly watched. So I would want this, this liquidity-led rally to kind of settle down. We currently don't have it under coverage, so we would be able to give an official view.
Okay, thanks very much, Jay. That's an important and very interesting point because, yes, Bhavesh Agarwal has been talking about the cell venture really feeding into profitability because, cells are a huge part of the cost. But you're saying with this crash in global cell pricing, we need to see how the dynamics play out over there. So important point, take that. Thank you very much for joining in with this quick take. Let's take this back to Prakash. Prakash, you were hearing the conversation there, and this remains the question now whether Bajaj's CNG bike emerges as a winner or whether these EV bikes from Ola, they emerge as the winner. We'll have answers only, I think, a quarter down the line. But is it safe to say that Hero is looking at some serious competition? In terms of stock positioning, what would you change? What would you add and subtract, given what we are likely to see at the entry level?
Okay, so here's what, Subhi. The EV portfolio for most larger established players, two-wheeler players, is not so significant as yet. So it won't kind of move the needle so much in terms of, the stock positioning. But on this debate between an EV motorcycle and a CNG-driven bike that only Bajaj has, I think Bajaj is also taking its time to kind of get this, not just piloted, but introduced commercially in a softer way so that they can clear all the nagging issues around the launch, the utility of the bike. But once it gets established, we are such a price-sensitive market and the segment that they are catering to, you don't have electric charging infrastructure in those markets where Bajaj is going to sell CNG, but CNG could possibly be available. So I think it definitely theoretically has a very positive construct. And you remember the stock reacted so positively after the launch was understood by most of us. So I think that's here to stay. A couple of quarters, it will just get strengthened. So I believe EV bikes is still a lot of issues around it, especially the charging part. And they're usually used for long distance drives, right? So you really don't, you can't depend on EV charging to take you 100, 150 kilometers at a stretch and come back from where you go. So that's an issue with bikes yet, and that's why scooters have proliferated. So wait for some time. But I still have a very strong view on Hero Moto bouncing back given the metrics that it has reached. It's probably bottomed out, if you ask me, in this quarter. Post the monsoon, things would probably look very positive for them.
All right. Prakash, well, thanks for that. And I want to ask you about, and Mangalam, I'm sure you've seen that story, which is the big story today, the foolproof indicator. Innerwear sales apparently are on the up and up.
Yes,
so it's proof of, as a friend put it, ye andar ki baat hai. So
Alan Greenspan used to subscribe to the underwear index. He said that during good times of the economy, the sale of men's underwear increases.
I thought that was during COVID. That's when all these stocks were going through the roof. But now it's turning on its head, is it?
I'm not too sure about the COVID bit.
No, actually, COVID...
it was all about innerwears. Remember, it was the era of Page Industries because that's all we were buying.
I think that is before COVID. COVID, I think it was... there was nothing very much...
Anyway, we're going on a tangent.
Something for Prakash to chew on, and I will come back to him. I mean, it's being seen... I read a headline saying it's the indicator of the economic turnaround to come. But more on that later. Anuj is here with what he's making of the market. Anuj, good morning.
Morning, Prashant. And slightly less interesting topic, right? The market. Let's get to that. The market, passed a big test on Friday with flying colors, which is a 20-day exponential moving average. And my sense is normally this is a perfect market, which after correction is ready for an all-time high. Not only it crossed it, but it closed above it handsomely, the 20-day exponential moving average. The Bank Nifty also made a double bottom low somewhere around the August 6 lows. And the market cues this morning are quite good. Brent crude is back to below 80. There's some hope of ceasefire between Israel and Gaza. I think that could be something positive. The only caveat is there should not be any incremental negative news flow on the SEBI side, which is, was the reason that you fell in the first place. Of course, the market will now eye what happens in the Jackson Hole Symposium and the US Fed, the chairman's speech over there. Coming to levels then, on the Nifty, the first resistance is 24,700 to 24,750 based on the options data, and then 24,800 to 24,850 based on charts. Support, of course, is 24,400 to 24,450, where you have the 20-day exponential moving average and the options zone. And in the unlikely event, if you break it, then the 24,200 to 24,250 level, which is Friday's low. And the Bank Nifty is more crucial because it's shown signs of a bigger short covering. It's made a double bottom, or looks like has made a double bottom at around 100 exponential moving average. It's yet to reclaim the 50-day exponential moving average, which is placed at 59.50, which is going to be the first resistance around the 51,000 mark, and then 51,150 to 51,500 based on the options. Support comes in at 50,500 first at the 10-day exponential moving average, and then 50,000 to 50,200 based on the options. I leave you with the quote of the day, and it ties in with what is the big event today. It's Raksha Bandhan. So it's a quote that I really like. A sister is a gift to the heart, a friend to the spirit, and a golden thread to the meaning of life. I can say that safely. My sister, for example, has always been my protector. So happy Rakhi to all the sisters, and thank you so much for protecting all your brothers and me also.
And, Anuj, thanks very much for reminding us of that. Absolutely happy Raksha Bandhan to everybody. And I'd just like to add on a slightly more somber note that sisters, mothers, all of us women in this country can protect ourselves, but it'll help if the men also join in. And I'm sure our viewers know what we're talking about. Huge movement in the country right now. So more power and strength to all the women out there.
Right. We take that point, and also more power and strength to all the women. But Anand, just one follow-up on the conversation that we were having before you spoke about the markets. Alan Greenspan has his men's underwear index, etc. But is there any particular anecdotal index that you look at which tells about the market going up or going down, how the economy is doing? Because you keep talking about these, the Domino's next to your house, for instance, or the Zudios around you and all of that.
The index that I use is, Mangalam, that when I go to the malls over the weekend, do I get parking or not? This weekend I did not. So the economy is really doing well and the market is doing well, and that's why the retail stocks are doing so well. So that's the indicator that I use.
That's Peter Lynch, parking at malls, etc. Well, parking actually, unfortunately, you don't get anywhere these days.
At least Mumbai, yeah.
All right, we'll take a quick commercial break here. More on this topic, and Prakash, of course, is still with us, and we're going to go back to him on some of these in a bit. Mitesh and Sudarshan also join in with some specific trading ideas in terms of technical ones on the other side. Stay with us. Okay, welcome back. Let's just quickly run you through the technical ideas this morning. Sudarshan and Mitesh are with us. Gentlemen, good morning. Great to have both of you here. Mitesh, we finally, on the Nifty at least, ended above the 20-day. How are things looking, and what would be the trades?
Morning, Prashant. One hurdle is cleared, another one is pending, is what I understand. So there's the 61.8% retracement in the gap area around this 24,625, 24,685 zone. I think that's the level which I'll watch now. A positive opening indicated by the GIFT Nifty suggests that we might open closer to those levels. So let's see if there's follow-through buying. If that happens, then I think we are looking at levels beyond 24,850. But for the timing, I'll hold my horses. The IT sector looks very good, strong on an outperformance basis. The banking sector also had a strong reversal on intraday charts on Friday. So there's a good chance that, we might get past that. So we are trading with long bias on stocks. But on the index, I think we'll take it step by step. I think 24,700 will see a lot of supply come in. And only once we clear that, we can look at the next resistance at about 24,850.
All right, next resistance is above 24,850. Sudarshan, your thoughts on the index?
Yeah, good morning. Well, I've been consistently maintaining all of last week that we are in a consolidation inside a bull market, and therefore every dip is a buying opportunity. So anyone who's listened to this show should have been long at some point, and we got so many dips, including one on Friday morning. That view continues. Now, there's no sense in trying to call a top in the market for me, because I don't know where it will end and how it will end. It could end today for all I know. But since we don't know, we just go with the trend. Even today, if you see an intraday dip, go long with the Nifty, keep a tight 100-point stop from where your entry is. But beyond that, stay long.
All right. Individual stocks, any of stocks that you have on your list today, Sudarshan?
Yeah, yes. Siemens is a buy with a stop under 7,000. The stock has been an outstanding performer and continues to do so. ONGC is a buying opportunity. There's a small dip after a big run-up. That dip could be a buy on dips idea. Stop under 315. Lupin is a buy. Lupin has a small bullish flag which tells us that if it breaks out, it could have a significant run on the upside again. So Lupin is a buy with a stop under 2040. And my final stock is also a buy, Persistent Systems, with a stop under 4740.
And Mitesh, your?
Morning, Mangalam. I too have a couple of IT names. The first one is a buy on HCL Technologies, made a fresh swing high. So keep a stop at 16,454. Look for a first target of 1,700. Birlasoft gave a good reversal. Buy here with a stop at 590 for a first target of 620. A buy on Dixon Technologies for targets of 12,750, 800, and keep a stop below 12,170 here. And a buy on Canfin Home with a stop at 814 for targets of 880.
All right. Well, that's basically technical trading ideas. We'll come back to you in a bit for more. Gentlemen, thank you very much for joining us. The GIFT Nifty is indicating a 65 point bump right at the word go. We're going to be joined by Mr. Ramdev Agarwal, Chairman and Co-founder of Motilal Oswal Financial Services. The 20th India Conference kicks off today here in Mumbai. So some market conversations around that in just a bit. Stay with us.
Welcome back. Just about 14 minutes to go before we kickstart the action today. Asian markets have been fairly range-bound, but the GIFT Nifty has been telling us it will get a pop at the open. So let's see how that plays out. In fact, the pre-open rates have started coming in as well, and that's a big one. Let's wait for it to settle and see if indeed we'll get that sort of a move. But the start seems to be on the optimistic side. Chandan Taparia is joining in for a couple of F&O ideas. He's from Motilal Oswal Financial Services. Chandan, good morning. What are you working with? Index or stocks? What are the calls for today?
Good morning, Surbhi, Mangalam and Prasant. Thanks for having me. So Nifty has been moving in a range from last couple of days. It has been moving in between 23,900 to 24,400 zone from last 8 trading session. In between, it was finding sustained supply near 24,350, but on Friday, it has given that breakout. And now it seems that bulls are again back on the track. We have seen positive data setup. Put-call ratio has seen a sharp surge. Volatility index has been falling down from last 9-10 trading session. So decline in the volatility with surge in the put-call ratio indicate that market is forming the higher base. And now I believe that 24,000 will be higher base to commence the next leg of rally towards 25,000 and way beyond 25,250. But for immediate point of view, till it holds about 24,300, continue to be with buy on decline stance for a upside move towards 24,750 and higher marks. Now looking at the bank Nifty, that has been underperforming, but now it has bottomed out with multiple support zone. Nifty has taken support at 50 EMA, but bank Nifty has formed the double bottom on the daily chart. 2 times in last 10 days, it tested the support near 49,650. So small follow-up could give the confirmation of the double bottom on the daily chart. And we believe that hold above 50,250, 50,500 could open the upside target to us 52,000 in the bank Nifty. Now looking at the stock specific, we have positive on the Nifty Auto, Nifty IT, selective fertilizer, and selective name from auto ends could be in focus, and capital market related counter could be in focus. So first is buy on Ashok Leyland. The stock has given a breakout from its pole and flag pattern, which has the bullish implication. Nifty Auto Index is doing well, and Ashok Leyland is all set for 275. One can buy with a stop loss of 245 level. Second trading idea, that is buy on Coromandel, holding the gains. Major trend is positive. After the consolidative move last 3-4 days, stock is at the words of the fresh breakout led by open interest activity. So one can buy with support of 1730 for an upside target towards 1840 zone. Last trading idea, that is buy on SCL Tech. We have positive on most of Nifty Auto and Nifty IT name. Most of the IT stocks looks good because most of these stocks have turned from key moving averages with built up of long position and the delivery volume. SCL Tech we are recommending here as it completed a rounding bottom formation on the daily chart, making R-top higher bottom on the daily and the weekly scale. So one can buy with support of 1630 and expecting an up move towards 1750 in the counter.
Right, Chandan, thank you so much for joining in and giving us your stock picks as well as the views on index basis, the FNO positions. The pre-open rates have settled now quite a bit, and the Nifty sees a mild uptick at the open, but a lot of individual stocks in focus. We have stocks like Oil India and ONGC having settled higher, and that's largely on account of the cut that has come by in the windfall taxes. So that's a positive. Other than that, we're seeing some traction in a lot of these defense infra-related names as well. So BEML is one stock which is up around 7%, settled about 7% higher. And we're also seeing some traction on names like Zomato, which is up close to around 3.5–4% at pre-open itself. Let's take the Zomato point forward itself. Albinder Dinsar, who's obviously heading the Blinkit vertical, yesterday wrote on his Twitter and LinkedIn post as well, saying that Blinkit reached its all-time high orders yesterday, also reached its higher all-time orders per minute and GMV. So a lot of those stats were blown away in yesterday's trading session. What was special about yesterday? A lot of Rakis and Raki-related things were ordered. In fact, at peak, the company hit a run rate of 693 RPM. What does RPM stand for? Rakis per minute. So they sold about 700 Rakis per minute at peak. And this morning we are also supported by a UBS note which has come in. They've raised their target price from 260 to 320. But mind you, this is on a roll forward basis, not really on an earnings change. But after the first quarter earnings itself, they've increased their estimates up by 20 to 30% for QCOM and 2 to 3% for food delivery itself. So you tweak all of that. They've compared the valuation of Zomato at 35 times EV to EBITDA. If you look at it on an FY27 basis, this compares with the average of Indian consumer retail peers at around 30 times. And it offers better growth prospects and perhaps better operational performance prospects as well, given the expected turnaround in Blinkit and improved margins in the food business. So they believe that the premium that they're paying to all the other consumer retail peers may be justified despite the up move that we're seeing. And that explains why the stock is up around 4% at pre-open.
The stock was 47 rupees around January of 2023. Yes. Zomato has really proved the naysayers wrong, and they were also raising expectations for a lot of the new age companies that are listing now, that they have shown that path to profitability is indeed possible. Prakash is still with us. Prakash, I mean, we've discussed Zomato, we've discussed the auto space. Anything else? I mean, the earnings season is over. So which are the brightest stars for you? The one or two stocks where you'd, go ahead and punch in a buy, even now with the market being where it is or the stock being where it is?
So, what stops us from adding to some of the names is the levels of the market itself, where we feel it's still a little bit frothy, and we would see lower levels. But if I were to buy at lower levels, subject to that, it would be, apart from the names like Zomato that we discussed, it would be something like a Hero MotoCorp. It would be some of the OMCs, which we've ignored because they normally don't make news headlines, but the way things have been for the entire quarter and what's anticipated going forward on crude levels, so you can very well imagine they will actually clock revenues which are faster, which are far higher and faster than most PSUs would do. So I would believe HPCL, IOC, BPCL, they make for very good buying even at these levels. But apart from that, it'd probably be a small bank here and there. It's more of adding to the same names. We've not found any numbers for any of the segments or stocks which have been very promising that you would kind of go and load up. All of them seem to be fairly priced. But yes, as I said, at lower levels, you would buy probably an ITC from the consumption basket. Autos, it would probably be a Hero Moto. So those are the names that we would still stick around.
I just put up these names if we can. These are big movers from Friday. PB Fintech had a big move, about 6–7%. And this is all the so-called we're talking about Zomato, but these are the other tech new age stocks. Paytm is another one. PB Fintech, big mover. Paytm was up 5–6%. Zaggle was another one which was up 8–9%. And there was also MapMy India, which was up sharply. So these are all kind of interesting moves which we had on Friday. But then, I mean, that day you had so much more. From the consumer names, let's do a quick check for Barbecue, which was up 10% on Friday. I'm not sure if there's anything more. Jubilant Food, of course, had a move after numbers earlier. Ethos was another consumer name which was up sharply. That's essentially the watch retailer. And in the financial space, on Friday, you had names like Piramal Enterprises. Piramal Enterprises went down 10%, then went back up 10%. So just a complete flip-flop after earnings, of course. But you also had AB Capital, which did well. You had Nippon India, which was higher. So just highlighting some of these sort of interesting movers from the previous trading session. But Voltas is another one we want to sort of highlight. And there are some brokers weighing in. I think there's UBS on one side, and I think there's Kotak on the other one. Sud is here with details.
So Voltas stocks saw a huge run after reporting a healthy set of earnings, and on Friday, company held a management call in which it has given the guidance for UCP business margin, for which it says it continues to maintain high single-digit margin guidance for FY25. Majority of the brokerages, though, remain bullish on the stock after Q1 earnings. Nomura has a buy call and target is rupees 1,857 per share. It says growth outlook remains strong and it has raised FY25 UCP revenue growth to 30% from 26% earlier. And also it adds priority of market share gain over margin. It's a step in the right direction by Voltas. Jefferies has a buy call and target is rupees 1,770 per share. It has raised FY25-26 EPS estimates by 10 to 12%. UBS too has a buy call and target is raised to 1,960 per share. It says company is optimistic on demand for Volt Beck and products in Q3 FY25 that is likely to be led by festive spend. Morgan Stanley has an equal weight rating. Target is rupees 12.25 per share. Kotak Institutional Equities, though, has a sell call and target is rupees 1,100 per share. It says there is a limited margin expansion and changed guidance indicates intense competition, and it has raised estimates by 11 to 14%. CLSA also maintains underperform call and target is raised to 1310 per share. It sees limited re-rating potential, and last is GS. It maintains sell call and target is 1310 per share. It says margin may have limited room to surprise positively in the future after a strong set of earnings in Q1.
All right, Sudarshan, thanks a lot for that. So that's about Voltas, settled about 1% higher in pre-open after a big move that it saw all of last week as well. Just one question to Prakash as well. Prakash, what are your thoughts on the cement space now? Because over the weekend, we also got the news that JSW Cement has filed for papers, finally a 4,000 crore issue, of which 2,000 crore will be fresh. Parth Jindal had said to us that, they're eyeing 60 million tons of capacity by the end of this decade. And it could be both organic as well as inorganic. They're mainly in the south, and south is where a lot of the action is as well, given, Ultratech's deal with India Cements. And this morning as well, there's the completion of acquisition of Penna Cements by Ambuja. So many assets which are on the block, so many buyers which are looking to strengthen their positions. And all of this as we come towards the end of the monsoon season, where there is perhaps the hope of a price hike coming in as well with higher infra, etc. play. How do you look at the cement space right now? Are there any stocks that really stand out for you?
Yeah. So, to make it very simple, it's either the acquirers or the potential acquirees, if I'm, those are the two segments that you need to fish out of. And if you look at most of the eligible small players, prices already gone up in anticipation of some kind of an inorganic growth participation that they would be involved in. But if you hear commentary from most cement players, they have been very clearly not anticipating a price hike or they've not made it imminent in their projections. And the cost advantage that you saw in the last couple of quarters probably also stabilized now, Mangalam. So there's nothing much in terms of margin growth. Now, where do the volumes come from? And that's where the consolidation becomes much more promising. So I would still go with the acquirers. What has happened to Ultratech after it's acquired these 3-4 assets in the last few years? They've ramped up, got economies of scale. The same thing Ambuja is likely to do. So if you really were to buy into a business for the long term, it would be something like Ambuja. Of course, you could debate on the pricing and all of that being higher now. But I believe what they are trying to build as a portfolio is going to be significantly dominant in terms of pricing power. And that's what the cement industry needs eventually. So I would go with Ambuja. They've done very well in terms of rationalizing their existing assets as well. And I expect them to continue doing well going forward on.
Okay, all right. Got that. Just a couple of minutes to go before we kickstart trade. By the way, some of these oil and gas stocks are also rejoicing the fact that the windfall tax has come down. So ONGC, for instance, is up about 1.5%, and Oil India, also about 2% higher. So tracking some of those moves. Okay, let's quickly move to our technical experts, get the calls in for the day. So Darshan, what's the stock you'll go with?
Well, I'll go with ONGC, buy with a stop under 315.
Okay, ONGC. And Mitesh, your stock?
I'll choose a buy on Canfin Home for targets of 880.
All right.
All right. Thanks very much for that. Mitesh, I was talking about these names earlier, Paytm and PB Fintech and Zaggle and Mapma India. Anything stands out to you?
A couple of them, Prashant. Zaggle is something which I like. It's been making new highs. There is signs of expansion on the daily and the weekly chart, so this stock could do well. The last closing high we got was around 380, and the stock just managed to close below that on Friday. So I think it will complete a saucer or top pattern, as we call it technically, on a closing about 380, and then one can look at targets in the range of 460 to about 480. Similarly, delivery is also on the radar. I think after a long time, the stock showing signs of reversals. It needs to get past this 420, 421 zone, and then it can head towards 460, 470 zones.
All right. Just before we start with market opening, keep an eye out on PVR. The stock settled higher in pre-open, up around 2% and that's largely because the last 5 days have been very good at the box office. Stree 2, the movie that released, has done almost 200 crores in collection so far. Some on the street are expecting 350 crores as well, which in a lean period is pretty good for the industry. The stock has already seen a bit of correction, so maybe this quarter being good on the back of content pipeline does well for them. The last 4 days have been good.
Absolutely, and stocks up 2% in the pre-open, as you highlight. Well, let's quickly wait for the market open. The first rate's coming up on indices, and then we'll get into stocks. What do we have at the word go? The Nifty is starting about 0.4% higher at 24,636. 24,636, by the way, is that gap area which the Nifty needs to target, and then, of course, beyond that, perhaps a little bit more. So 24,618 is where the Nifty is at, 616. That's about 70 points higher. The Nifty Bank is up about 100 points. That's 0.25%. And 50,622. We've got the IT index, which, of course, was a big mover on Friday, which is up about 12 points, 10 points. It's actually now almost in the red. Advanced decline is good to begin with, but it's early 8:1 in favor of advances. So that's the essential sort of rates. So as far as indices are concerned, as you can see on the Nifty 50, there are only 4 stocks which are down more now, but it's overwhelmingly green, at least to begin today's session.
Well, the stocks that are catching your eye are actually beyond the Nifty. Zomato and Ola Electric. Ola Electric still electrifying, 5% up at the word go, and Zomato is reacting very well to the higher target price that UBS is ascribing the stock now, 4% up on Zomato. Anyway, back to the Nifty. Let's see what's working here. The stocks that we were just discussing, ONGC, it was also Sudarshan's call for the morning, 2.5% higher as windfall taxes have been lowered quite substantially. BPCL is up about 2% thereabouts as well. Reliance is up, so these are the early movers, and you've got gains on Shriram Finance, Tata Steel, Ultratech Cement, Adani Ports. Very diverse set of stocks taking the market higher. What are the banks doing? The bank Nifty is actually in step with the Nifty, so not too bad. SBI is up about 0.5%. HDFC Bank is sulking. It's absolutely flat. ICICI Bank is up about 0.5%. So divergent trends across banking. And finally, IT seeing a bit of a cool off, not a sell-off, but a cool off after the Friday big move. TCS Infosys down about 0.25%, but not bad. 88 points up on the Nifty.
Not bad at all. In fact, it's picking up for the Nifty. What's picking up more is the broader markets. Nearly 1,800 stocks advancing for about 300 stocks which are declining, making the advanced decline ratio at a firm 6:1 at open itself. We were talking about a bunch of stocks that are doing well, right? So from the broader markets, Voltas continues to move higher, up around 3% this morning. Street likes the commentary that is coming from the management. We spoke about PVR as well, up around 2.5% at open itself. Birlasoft, it's one of the stocks that we highlighted this morning that in an otherwise, profit-taking mood for the IT pack, Birlasoft is standing out with a 3% up move. It follows a 6% move that happened on Friday as well. The stock's out of F&O ban, so that explains one of the moves that we're seeing. On the pharma pack, though, we're seeing some bit of profit-taking. So, you have names like Strides, Alembic, Aurobindo, Torrent. In fact, of all the top losers in the F&O space, 4 out of 5 belong to the pharma pack itself. So we'll just keep an eye out on that one. And Ola, when you spotted it, it was up around 6%, now up 9%, taking the up move all the way up to nearly 90% from its listing. So, maybe a couple of more rupees from here, and Ola will actually double from its issue price of 76 odd rupees. So we're looking at a number at 152, which would mean that the stock has doubled from its listing. So 10 rupees from here, and the stock would have doubled in just 10 trading sessions. That's about Ola Electric, and a lot of these other stray stocks doing well. Case in point, something like Ajmera Realty, Keynote, some of the real estate stocks, and Kitex Garments as well continues to do well, something that we've seen over the last few trading sessions.
Absolutely, Kitex is up 40%, and today is the third session, so that's how fast some of these moves are. But of course, I mean, Ola continues to be really quite something. So 143 on Ola right now. CDSL is up about 4% as well. GMR is another one. Vivek was highlighting GMR. It's up 5. It's locked up 5%. Keynes is up 5. PGEL, that is PG Electroplast, is up about 4% or so, amongst other things. So this is a pretty good-looking screen all across at this point in time. Well, 70 points on the Nifty is what you have, 24,600, and it's looking pretty good as far as the screen is concerned. PB Fintech is taking a bit of a knock. It's down about 3%, but the stock's done very, very well over the last couple of trading sessions. Let's welcome in Ramdev Agarwal. He's chairman and co-founder at Motilal Oswal Financial Services, and he's joining us from the sidelines of the Motilal Oswal India Investor Conference. It's the 20th edition. Ramdev, great to have you with us here. Appreciate your time. Thanks very much. Prashant this side. The mood is buoyant as it has been the last couple of years. A mini heart attack about 10 days back with global markets and huge amount of volatility. But that was just it. And the market has looked through that as well in some style, especially here in India. In the US, the S&P is just 2% away from its highs. Remarkable stabilization across markets. What are you most excited about, Ramdevji, at the conference? What theme, what would you like to hear over the next couple of days? What would you keen to sort of, it's not just what you are telling investors and they'd want to hear from you. What do you want to hear from the people who are gathered there for the conference?
Yeah, good morning, Prashant. And actually, this is a wonderful time post-election and post-budget and all. This conference is coming up, and we are seeing very wide participation from the corporate side as well as from the fund side. A lot of FIs are coming in today, so I'm looking forward to talking to them. So I have two objectives to figure out. One is sitting through the corporate meetings and try to figure out what's happening on the ground. Because the recovery post-COVID has not been across the board. I mean, there has been some patches where like consumer and all, FMCG and all have been very slow. So what's happening there? So we have Godrej Consumer coming up, and Hero MotoCorp will start the one session immediately after. So there are a whole lot of corporates we have designed to get two things for the people who are attending the conference. One, to figure out what's happening on the ground across the sectors, where the bright spots and where are the challenges. Second, what's the behavior likely to be of the FIs? I mean, FI is a big player in Indian context. Of course, because of retail participation, the importance of FIs is kind of reduced, but still they are very large players, and their participation, particularly on the upside, buying side, can further fuel the markets, what we are seeing in last 2 years. So these two aspects are the key focus points for me.
All right. Very interestingly spelled out, Mr. Agarwal out here. You speak about on the corporate side, how's demand, and on the investor side, how the FIs are looking at the Indian market. You talk about bull markets climbing walls of worry. There are multiple mountains of worry that we've crossed over the last month and a half or so itself. But now the bull market itself has become a bit of a cause for worry, largely because of everyone talking about valuations and the kind of euphoria that we're seeing in a lot of the stocks. Is there any hint or tinge of risk among all the participants who are there around? Is there, any sort of worry that people are talking about?
So this early in the sense that we have just about, this is early morning, they're just coming in, pouring in. So through the day, as we interact with them, we'll get to see more probably one-on-one meetings in the evening. That will open up their concerns, their excitement about India. I mean, I think the only concern, even among the domestic investors and global investors, is the valuation. Global investors have a choice not to come or go to some other markets, buy stocks somewhere else, or not buy at all. Whereas domestic investors don't have any choice, but to, if at all they want to buy, they have to buy India. So, so that's a fundamental difference, and so we have to gauge the mood about the FIs. And what I had seen 2 months back, I was in US, and what I felt was they were waiting for the election event to get over, and then they will take a fresh look at India. So whether they are as positively inclined as the domestic investors, that we have to see, or will the valuation keep them away? So it's a, I think we can talk about it only after 2 days, not now.
Ramdeo, good morning. Great to see you there from the conference, and then the buzz is quite palpable. We can feel it here in the studios as well. The one corporate conversation that I would really watch out for and would want to know what the outcome is from Hero MotoCorp. I think you have some members of the management who are joining in. And these are very, very interesting times for the two-wheeler segment, right? Because you have Bajaj turning on the competition by launching that CNG bike. You have Ola really turning on the competition by getting into motorcycles as well. And look at the Ola stock, Ramdeo. It's almost doubling since listing. So markets we know can swing to extremes, extreme fear and extreme greed. Where do you think we are on a business like Ola? And in general, what's your sense on two-wheelers? There's so much happening here.
Yeah, so as the bottom of the pyramid picks up, I mean, when the trickle down happens and bottom of the pyramid picks up, the demand for two-wheeler has to just explode, because the penetration still has a scope to move up. And for last 2-3 years, they were slow immediately after COVID. So a lot of replacement demand is also likely to happen. So my sense is that demand for two-wheelers is going to pick up, but that's whether it is happening in aggregate. I mean, yeah, the excitement of Ola for their market share, the excitement of new business model, those things are there. But actually what is happening on the ground, that will come to know when we meet Hero management and Ola management or whosoever are there from the industry. So I would think that the best is ahead for the industry. As we go forward, recovery will pick up. I think we've seen the first quarter result. First quarter result was fantastic for Hero, and I think they are going to get back their volume pickup because monsoon is very good. So the post monsoon, I think when the crop time comes, my sense is demand will be quite buoyant.
Got that. Ramdevji, one of the other names, by the way, Zomato at the conference?
I don't think so. I mean, they might be there as a company meeting, but they're not there on the CEO track.
I see. I mean, we're getting newer and newer ways of assessing demand, right? Weekend orders. I'm sure you would have seen. And the pace of ordering, it's something that you've been... I don't know if you have to do it now every weekend. On Monday, we have to see what the weekend was like we do for movies sometimes. But incredible run. I mean, and you've been bullish. You were early on. You've been bullish. But at a fund level, you've also been booking profits there, Ramdevji, as far as Zomato is concerned. What's the thinking overall? And how much do you own? How much did you start with at the peak, and how much do you own now, as far as that position is concerned?
So that, I mean, at mutual fund level, those positions keep changing. But what you said is right. What kind of thing we accumulated at sub-100 level after the first correction, I think quite a bit of that we have sold at a mutual fund level. But exact position I would not know as of yesterday or today. But significant trimming has happened as the prices have moved to 200 plus. I think even fund managers, they also get a little jittery when the stocks move like this, and they do like to book some profit so that next opportunities they can bet on. And also because of risk management, when the portfolio size goes beyond 10%, regulatorily also you have to trim it, and even as per our own style of investing, we bring it down to 6-7% kind of thing. So I think all of these have led to some kind of profit booking, but my outlook for the industry still remains extremely buoyant, in the sense that it's this is the largest internet business and it is one of the largest opportunity one is tapping in quick commerce particularly. So I think the best is yet to come again in this particular segment.
You know, the wealth creation metric that you have, Mr. Agarwal, it's usually about the size of the opportunity, the improvement in margins, and the underlying valuation re-rating which may come about as well. For Zomato, we've seen a fair amount of that, but the size of the opportunity still remains. I wanted your thoughts in particular on Trent, because there is a CEO track out there. Trent continues to compound at upwards of 80% when it comes to earnings. Valuation re-rating has happened, I mean, over 130 times 1 year forward earnings. What more are the triggers for wealth creation out here? What is it that you would like to hear from the management of Trent at the CEO track?
Yeah, so the valuation part, I mean, businesses are very exciting. What they're doing, what they're achieving, that is very exciting. But the valuation part, which is happening at 100, I mean, the pace at which, even if you look at the Ola listing at 76 and now 140, as I've heard about it, I think 140, 135, 140. So the kind of demand which is there in the system, and all the fund managers, they're sitting on cash. So valuation is one thing which is becoming difficult even for most bullish person like me to justify. So wherever there is a predictable growth, we are seeing massive demand, and at times the prices are running ahead of the underlying value. So I would think that prices, even in Trent, has reached a level which is very difficult to understand. But there is a momentum in the company's performance as well as in the price.
That's a interesting sort of a dilemma, I think, that a lot of fund managers are confronted with, and you've beautifully summed it up, sir. That the underlying businesses might be great, but at what price do you keep buying them? So, Ramdevji, then tell us what excites you. I mean, if we simply, try and marry the two, where there is underlying momentum, growth, business potential, and valuations have not turned completely sort of out of whack. Where is that, that space in the market, if you see it at all?
Yeah, so one of the things is that newer opportunities are coming up. Like say, all these digital companies were kind of not down and out, but were out of favor. So all the PSUs were another segment which was completely beaten down at some point of time and became darling of the market. Right now, say, banking sector is completely out of, I mean, it was darling of the market for decades, and that's where the FIs put a lot of money. And today it has not done well because they have also sold a little bit of it. But when you look at the fundamentals, I mean, I was looking at my presentation, and there one of the slide is about the quality of NPAs or quality of assets, credit quality in the banking system has been, I think, right now it is historically the best, and it is becoming even better. And if you look at it, while the business is growing at 15-60%, and quality of asset is the best, and it is likely to remain better as we go forward, and yet the valuations are at the lowest. So I think the market does this funny thing. And that is what throws you opportunity. So I would think that you have to be a little contrarian, or you have to buy into something which is unpopular, but you have conviction. So that's what, and it's not that all the sectors, 50-60 sectors, it's not that all of them are in unreasonable valuation. There are 10-15 sectors or segments which are reasonably priced or underpriced. I think that's where you have to pick up the stocks.
And which one of these would you like the most? You're saying there are about maybe 10 to 11 segments at least, which are still reasonably priced. Out of these 10, 11, which would be the ones that you like the most, Ramdev?
I would look at still BFSI in that capital market, as I also have told. Capital market still looks very exciting. You look at last month demat addition, it was almost all-time high, 4.5 million. So the way market is expanding, the way flow is, I think capital market guys, they're still, I think the growth in the segment is going to be quite significant, and it is going to be very high quality, asset light. So I would think the banking, the private sector banking and BFSI, they look to be good. Even insurance is looking up very well. But there are other segments in manufacturing and all. One can look at it, but since I'm not that clued on to day-to-day stock picking, I would think that this sector is close to my heart and they look to be good.
And it's likely, and for the capital market space, a lot of the chatter was, regulators trying to slow down, trying to put some brakes, right, through all these regulations on the F&O side. And you think that is now, that bump is behind, or what's speed bump, not a bump, but a speed bump is behind, or does that cause any worry at all? Could there be more coming? What's the sense? Taxation went up. The market hardly noticed, but I mean, it is happening, right? Some of these speed breakers are being put in.
Yeah. So I think regulators are putting some restriction on the expansion of the F&O market, but there is a lot of energy. See, it is about the energy. The participation, the money is coming in the market. Now, whether it goes into F&O, whether it goes into cash market, see, once the restrictions come, then only players will decide what is going to be their new game. Because the money is there, money is pouring in. So I would think that with a little break in terms of volume expansion for a quarter or two, and market will get adjusted to the lower earnings, lower volume, whatever. But I would think that in a year or 2 years' time, even with the new restriction, we'll see all-time new high in terms of revenues and profits from the players. Because regulators can restrict the volumes or who should play or what should be the lot size and things like that. But what the entrepreneurs will do in response to that is yet to be seen. So I would remain, if the business is growing, participation is more, funds are flowing, I would think the capital market in general, despite regulators' concern, will do very well.
Right. Going back to the Zomato point itself, quick commerce as an opportunity is a large opportunity. Everyone's talking about the sort of, runway for growth that there is, but increasingly there are more competitors raising a fair amount of funds as well. Flipkart started Flipkart Minutes, for instance. Zepto's raising funds at breakneck pace out there. So do you think the strategic significant advantage of Zomato in that will continue, or at some point it becomes a 2-3 player market?
Even today it is 2-3 player market. I mean, in quick commerce also, you have Insta, you have Blinkit, and now Zepto is building up very quickly. Zepto is presenting tomorrow. A very wonderful story to listen to. There is a lot of excitement out there. So again, they're all bit away from the serious money making, but the pace of growth, 100%, 80% compounded. I think the compounded growth of about 70, 80% or even 100%. I mean, in just 5 years' time, you look 3 or 4 years' time, you look very different. And once the operating leverage starts working from negative 2% or 3% net margin to 2%, 3%, 4% net margin, you can do the numbers on a large turnover of $10, $15 billion. The numbers will. And another thing is that it is going to be a very asset light. So free cash flow will be very, very large. Economic profit will be high. So this is a completely different environment, different type of companies, different growth levels, different free cash flow, and a very sustainable, visible kind of demand in growing economy. Today we are a $4 trillion economy. In 10 years' time, we will be $8 trillion economy. Now in 8 trillion, your consumer demand will be at least 3x more than current levels. And the players will be only 3. So the growing demand, consolidated playing field, and then the margin expanding. People want convenience in India. So I think it's a very exciting time for these companies.
Adit of Zepto had said that in the next couple of years, they'll be bigger than DMart. I just wanted your thoughts on DMart. What are you thinking about DMart? Because Blinkit has said they are not gaining any share from DMart, or they are not eating into their shares. The segment of the audiences are different. But if consumption has to increase and value-conscious consumption has to increase, is DMart an opportunity currently?
No, DMart has its own customer base, and I think still they have not covered the geography, the entire country. So, I mean, if you go to the developed market also, I think this organized format stores, they have a role to play, because ultimately this quick commerce, online buying and all, it can take care of some portion for the convenience, but the bulk of the buying happens from the stores. So I think DMart has a different segment and they will keep doing well. Just that DMart might be growing at 15-20%, where these guys are growing at 80-90%. And 80% growth is not 4x. 80% growth is like 20x. So that has to be understood in the mind that 4-5 times more growth on the top line and bottom line is not 4x for the valuation.
Ramdeo, I want to get your attention back to Ola. I mean, how can we not, right? And I think our viewers will really benefit a lot from your wisdom. You've seen this for decades and decades, right? So now here's a new business. And I guess timing is also very interesting because we were just discussing Zomato. Zomato has proved to the street that good businesses can come. They can come making losses, but they can turn around. They can have sustainable growth. Maybe that's also having a rub-off effect on Ola. Apart from the scarcity issue that you described, right? I mean, to get good businesses at a good pricing. They offered this business at 76. The market is now almost giving them 150. Is it getting excessive? How should investors look at Ola?
Subhi, I'm sorry to say that, but my knowledge on Ola is very limited, except that I know that they are clearly leader in their field, and in two-wheeler particularly I have seen being number one is very important. So on the electric mobility, they are clearly number one, and they have very dominant share, and so that dominant share is what market is very excited about, because still the transition from IC to EV is limited, so I think at some point of time, as the transition picks up from petrol vehicles to electric vehicles, I think they are there to encash, and their positioning is so strong that it is going to be extremely difficult for anybody else to dislocate them from the current position. And that's what market is saying, that okay, you are number one and I want to be in my portfolio even if it is a little expensive. That's what I hear. I don't think the current fundamentals per se would justify the price one is paying right now.
You know, Ramdeo, let me ask you about what this means for the traditional big boys, right? And you have been one of the earliest, I think, persons who picked out Hero. It was one of the stocks many years ago that you singled out. Now, for Hero Moto itself, the landscape is really changing, right? You have Ola with this competitive, fierce intensity. They're getting into bikes, and their bike is starting at 75,000. There is Bajaj, which is always a challenger. Bajaj is saying we've got a CNG bike now. They want to also make inroads into the traditional stronghold of 125cc below, which was Hero. So for Hero Moto, a company that you've loved and liked and tracked for so long, what is the road ahead looking like?
See, for them, both the sides, one of the things is that now the competition in the IC side is not coming in the sense that new competitors are not coming. There are three guys, Bajaj, Hero and TVS. They themselves are kind of fighting among themselves. So if the market expands and the transition to EV remains slow, in that case, they have the entire booty amongst themselves. And then on top of it, the export market is also looking up. So I think they have, and also at some point of time, they'll also become a dominant player on the EV side. It's not that EV is left out to Ola or everybody has a EV offering, and I'm sure they'll give tough competition. But this is the problem of the winner's curse. When you are so good with the old technology, it becomes very difficult to get into a new one.
Yeah. Ramzuji, let's wind this conversation down. Politics is back, right, on the anvil. Yeah. The last election results did barely sort of caused any breaks, but now we got state elections. Although we don't have the date for Maharashtra yet, but we do have it for Haryana, J&K. What's your sense? Do you think Maharashtra is a big one? Maybe it'll have a little later. But they'll have to do it because the assembly session ends on the 25th of November, if I'm not mistaken. So they have to do the elections, I think 1st of October and then maybe mid-October, maybe a little later. What's your sense? Could it be a market moving event in that sense? Because it's not very far away.
I would not be. I don't think so. I mean, if the central election where the ruling party lost its majority and we got into some kind of a coalition government. That didn't deter the market. I mean, what happens to us? How does a small one state election matter? In the sense that, yes, it is important politically, but as far as the stock market is concerned, I think we have seen and got over it much bigger event than what is ahead.
No, that's well put. Thank you very much. We would love to go on, but I understand you have sessions to go to as well, and people are waiting to listen to you. They've not been listening to you here on CNBC. Thank you very much for joining us, Ramdev. We have a fantastic conference, and we'll touch base in a few days after the conference is over. And sort of, I think, as you said, you'll have a better sense after speaking to people about those the two things you're trying to understand: recovery on the ground, and of course, behavior of FII is something we started the conversation with. Thank you very much. 80 points on the Nifty, 24,620 is where we are at, and it's looking pretty good. We'll take a quick commercial break here. We'll be speaking with the management of Electronics Mart India to discuss their business and, of course, the recent stake sale by promoters. Stay tuned.
Welcome back. Looking good for the markets. The mid-cap index doing well this morning as well. One of the stocks on our radar is Electronics Mart. The reason why we're speaking to the management, apart from getting their business outlook going forward, is also because on Friday, promoters Karan Bajaj and Pawan Kumar Bajaj sold about 8% stake in the company. Promoters who held about 73%, their stake comes down to about 65%. Premchand Devarakonda, who's the CFO of the company, joins in now. Thanks a lot, Mr. Devarakonda, for joining in. Obviously it's not your call to take, but if you could explain to us what the rationale for the promoters' stake sale was, and secondly, is there any more on the cards? Because, they've sold about 7.8% already.
Very good morning. And first of all, thank you very much for having me on your show. Before we get into the further discussion, I would like to update you on the background of our promoters. Our promoters started this business way back in 1980 from the scratch, and they reinvested whatever they earned from the business in the same business, and they grew the business over a period. And it is the time for them to unlock their capital and also secure their families. So that was the only intention they had for diluting their stake in the business. And also they don't have any plans to set up any parallel business. So the entire family is working on growing this business, and they don't have any other business also. That's the reason why I think it is,
What we want to understand is if they will sell more, because now what they've sold gives them about 690 crores. They still hold about 63% stake in the company. Will they continue to hold on to that, or could there be some more selling in the very near future?
It will not happen in the near future, as per my discussion with our promoters. And they are right now holding about 65% stake in the company. And that will be retained by them till our share price touches 1,000 rupees. That's all.
Sorry, you're saying...
He's saying promoters will be there till the share price touches 1,000 rupees. It's 41 right now.
And you... So let me combine.
So they won't sell till 1,000 rupees.
No, I'm just saying in jest. You said near term and 1,000 rupees. So 1,000 rupees in near term.
If it goes to 1,000, we never know. Like if someone wants to pay, right? So we never know that. But I'm very jokes apart, and they're very clear that they want to hold the 65% for long term. That is for sure.
Okay, long term. And should we take that 1,000? As or you was just saying that in jest? So you're saying that for the long term?
I'm just, don't take it seriously. I'm just kidding.
Okay, got it.
Okay, so let's come down to the brass tacks, to the business. And business has looked quite okay. The revenue in the first quarter is up 17.3%. Your margins have been steady at around 7.8%. Let's track the longer term trajectory. Same store sales growth. So in FY22, it was around 22%. It dipped to about 17% in FY23. FY24 was 8.4%. So give us two parameters. One, what is the revenue target for this year? And second, what is the same-store sales growth that you'd like to maintain on a steady-state basis?
See, we are targeting year-on-year 15% top-line growth. That is 7%. And second thing, we would like to maintain the same-store growth at above 8%. So it may go up to 10%. So it will be ranging between 8 and 10.
Okay, so same-store sales growth between 8 to 10%, top-line growth this year targeted at about 15%. Just break this down in terms of geographies as well, because while you're really dominant in South India, you've also been expanding into the NCR region, into the north. So what is the revenue mix right now, and how do you see it shape up as we go towards the end of the year?
See, currently we are getting 60% of revenue from Hyderabad, about another 8% has come from NCR, and the remaining from the Telangana, Andhra states.
Right.
So that mix, that proportion will be more or less same for the year. So that's what we are expecting.
All right. Mr. Devakanda, I wanted your thoughts on 2 points in particular. One, NCR, while it is a small contributor to your revenue, the leverage out here available is a lot more, because NCR is still about 2.6% margins. The per store sales is a lot lower than what you do in South as well. South has 8.3% margins. So at what point does NCR scale to the same per store metrics as the South? That's point number one. And secondly, because a large part of your revenues are Andhra and Telangana, the recent political elections, etc., which is happening, the thrust on infra in Andhra and Telangana, could there be further than this 15% growth out there? So on both South and North, I wanted your thoughts.
See, North, we have a lot of scope. Currently, we are having less than 5% market share, not even 5%. It is further less. It is at around 1% market share in NCR. There we have huge potential to grow our business in the near future. And it takes at least as per my assessment, it will take another 2 years to reach the same levels of the South market. And South market will be growing because the economies of these states are improving year on year. So as a result, the market is also expanding. And we are also expanding our stores to the tier 2, tier 3 cities rampantly in South cluster. So as a result, there will be consistent, at least for the next 4-5 years, there will be consistent growth in the existing market, and there will be the growth will be much better in the North cluster.
Sir, just a word also on your product mix, because I think it's the larger appliances, the high-ticket items, which fetch you better margin. But their contribution in your mix has been coming down. Mangalam tells us it's come down from 61% to about, I think, 42% in FY24. So what is the targeted mix that you want to have? And give us some sort of a trajectory on margins. I mean, full year blended EBITDA margins for this year. What is it that you're aiming at?
See, the product mix is not under our control because markets will drive that. So if the demand for mobiles go up, obviously their contribution will be more in our product mix. So, for example, in the last summer, there was huge demand for the cooling products. As a result, the proportion of the large appliances has gone up drastically compared to the earlier years. So that's why it is purely dependent on multiple things. But we are giving equal importance to all the product categories because each product category is headed by one business head. So their responsibility is to show an improvement year on year in their categories. So that is one part. And what is the second question you asked?
Margins. The margins, sir. Full year margins, what are you targeting?
So in the first quarter, we had an EBITDA margin about around 7.8%. And by end of the year, it will be above 7%. So between 7 and 7.5%.
All right, we'll leave it there. Thank you very much for joining us. Good speaking with you. And thank you for being with us here. I just want to take a quick look at the markets as well. So on the Nifty, it's 30 points, just 30 points left. So, you know, the high point today was 24,640, and we've given up about 70 points from the high. So 24,570 or so is where the index is now trading at. So this is not a good look. It's a red candle and a prominent one at that. But this is still early days. Of course, remember, we are also coming out of the 400-point big rally that we had on Friday. So that was a pretty large one. Bank Nifty is marginally in the red. That's been the underperformer between both indices. Market breadth still holds very solid, 4:1 in favor of advances. You know, just look at Hindustan Zinc because, I mean, I think there was, of course, a big crack on Friday, and it's down to about 493 now. Hindustan Zinc is I think it's once again, Hindustan Zinc stock will come up. It's once again the biggest volume-led loser for the second day running. On the NSE, is the biggest, by far the biggest volume-led loser, 492 on Hindustan Zinc. There's Mazgaon Dock, which is sort of 3% down. Prudent, again, from the highs, it's taking a bit of a knock, 6% lower. Mahindra & Mahindra is down about 1.33%. Policy Bazaar is coming down about 3.5%. PB Fintech, of course, after Friday's very sharp gains, is coming down. Suprajit is down about 4%. V-Guard is down about 5%. And so it goes. So volume-led activity is still very much on the upside, but just highlighting some of what is happening on the downside as well. You got about a 30-odd point out there on the Nifty for now.
Prashant, absolutely take your point, but I just wanted to highlight some of the stocks that are managing to buck the trend as well. A lot of them are news-based. We were so sort of absorbed looking at Zomato and Ola this morning, but the others deserve a mention. BEML, remember we told you in the beginning that a lot of cabinet approvals have come in for large ticket metro projects across Pune, Thane, and a couple of other places as well. That's working very well for a stock like BEML, which is up 6%. There's Kaplan Point, which has received the Brazilian regulator's approval for one of their facilities, pharma facilities in Tamil Nadu. That stock's surging 8% right now. Shiva Cement is owned by JSW Cement, which is doing an IPO. So Shiva is up about 5-6% as well. So these are some of the stocks in news which are having a good day despite the market overall cooling off quite a bit. Well, with that, let's quickly move on to the next theme that's coming up for discussion. We have with us Abhishek Kumar, Equity Research Analyst at JM Financial, and also Mr. Vijay Simhaj, COO of Zensar Technology. Thank you so much, gentlemen, for joining in. Mr. Vijay, I want to start with you. The topic that we want to discuss is whether the IT sector is really past its worst, given what we saw in the first quarter, and whether these green shoots are really visible in some of the foreign geographies like the US. Why don't you take it off and tell us what you're hearing from clients now? I mean, in between, there was this big fear about the possibility for US recession, but now data is again looking good. So the macros are really confusing. You tell us, what is it that you hear on ground from companies?
Yeah, so look, good morning. Thanks for having me. So I think overall we are seeing that the demand situation is stabilizing for the IT sector, especially from the US economy. For us in Zensar, we actually had a 6.6% sequential growth Q1, and we are cautiously optimistic that this will continue for the rest of the fiscal year. Having said that, I don't think it is same across all industry sectors. I think it is stable in BFSI. There is moderate amount of growth that we are seeing in the manufacturing and consumer services, primarily in the consumer service. And healthcare as well, there is cautious spending. But in the tech sector, we are seeing some bit of right sizing. So it is fairly volatile. So it's not a uniform stuff, but based on what we saw in Q1 and what we are currently seeing, I think we are cautiously optimistic about the rest of the year in terms of growth in US.
Gentlemen, morning. Mr. Vijay Simhaj, Prashant here. If I can sort of ask you, at a broad level, the concern is that the growth rates that we saw pre-COVID, right, on a CAGR basis, that will not repeat for the IT industry over the next couple of years. So you're essentially going to settle in for a lower rate of growth. Is that an assumption one should make, or do you think it's going to be, as you said, it's different sectors are growing at different speeds, and it depends on what a company is exposed to?
Yeah, I think it'll be very difficult to broad base it. We are definitely seeing that the clients are a lot more discerning about discretionary spend. By that, I mean that there is a lot of focus on like digital commerce. There is still focus on customer experience, definitely focus on automation, and of course, legacy modernization in pockets. So given these broad trends, and of course, there is a lot of excitement and enthusiasm about AI, Gen AI, and the way it impact business in the larger scheme of things. I think it will be not right to make the assumption that like we will not get to the pre-COVID levels of spend. But having said that, right, I think clients are discerning in their discretionary spend, so there would be some short-term volatility.
Okay, so would you hazard a guess? I know this is difficult to put a number to these things, but Vijay, would you want to sort of, and I'm not saying Zensar alone, but overall, the peer set, are we looking at sort of mid-single digit, high single digit? What should one expect for FY25 going into maybe FY26? So next 2 years, I mean, just the overall growth trends.
Look, I think it's very difficult to hazard a guess, and we particularly are not into the giving the forward-looking guidance. We are cautiously optimistic. Our Q1 was really good in terms of 4% quarter-on-quarter sequential growth, and within the US market, a 6.6% growth. As we have said in the past, our offerings around experience, engineering, and engagement is finding a lot of resonance with our clients. So we are cautiously optimistic that we will continue to grow. It's very difficult to like hazard a guess at this point of time.
All right, not asking you for forward-looking statements, but I remember the first after the first quarter when we had this conversation, you were talking about a couple of large deals being in the pipeline, and you were hopeful of converting a couple of them. It's been a few weeks since then. Have you converted any? I mean, what's the update there?
Yeah, I think, look, we can't talk about specific deals, but I think it is looking good. I think those deals are obviously moving in the right direction. But having said that, as we said in our Q1 update as well, I think some of these deals have a longer decision cycle, but we are hopeful that we will close a few of them in the current fiscal.
Okay. Well, Abhishek has been listening into the conversation patiently as well. So, Abhishek, let's get in your thoughts. I mean, what was your takeaway after the first quarter? While, I mean, we always go in the season with great expectations, but we don't see the big upgrades really come through. What are you penciling in overall, and what are your sort of top picks in the sector right now?
Yeah, hi. Good morning. Thanks for having me here. So yeah, you rightly pointed out the upgrades didn't come through for most companies except Infosys after first quarter, and which was not very surprising to us. Infosys, the guidance, the year beginning guidance was quite conservative, and they did better than, in fact, 5 out of top 6 large cap IT companies outperformed the analyst expectations in 1Q. Still, just Infosys earnings were upgraded. That tells you that probably Infosys was where the guidance and the expectations were slightly more conservative. And that's why Infosys remains, our top pick. Apart from Infosys, we like Tech Mahindra, and we also like Wipro. So those will be our top picks in the large cap sector space.
What about Abhishek? What about the mid-cap space, mid-cap, small-cap space?
Yes, so in mid-cap, we like Persistent Systems. That's our top mid-cap pick. We also like KPIT.
Okay. KPIT, though, post the earnings, there have been some downgrades to estimates, right?
I wouldn't think so. See, KPIT is one stock, which consistently is delivering for past 2 years, and that has led to, a step up in the valuation band. So I don't think there is any change in the outlook there. The guidance also was maintained both on the top line and EBITDA margin, and they continue to win deals despite, the challenges that we have seen in the auto OEM side. That tells you that, the programs that they are involved in with the OEMs, which is software-defined vehicle programs, those are not getting impacted by the current weakness in the EV demand.
So just to wrap it up, Abhishek, what is your sense? I mean, this broad IT rally, we see this. Would you see this broadly as a flash in the pan, or you think it could be sustainable? What are you hearing from investors? Because it is also about what other sectors are doing, right? It's all relative.
Yeah, it is relative. That sector rotation does play. But, as an analyst, if I look at the fundamentals of the sector, I think gradually things are improving, especially as Vijay Simha also mentioned, banking is stable. A lot of players pointed at some green shoots in the banking. Our data analysis also suggests that probably the phase of optimization that banks were on for past couple of years probably coming to an end. And if the rate cut happens and next budget cycle starts, there could be discretionary spend, that can start again. So I think, and banking generally has been a precursor to the broad pickup in demand for IT services. So I think the current rally could sustain. There could be ups and downs given where the valuation is, but I think earning upgrade should, start coming through. So yeah, I think good time to stay invested in the sector.
Okay, all right. Both of you gentlemen, thank you very much for joining in and giving us some perspective on how demand trends are shaping up in the IT sector and how stocks are poised for it. We have to take a quick break on that note. We'll come back on the other side, get you the latest from the commodity markets. Equity markets are trying to hold on to that little bit of green, but we are back with Manisha. Let's see what the headlines are from the commodity space. Welcome back. So the market, as we've been saying, is really trying to hold on to that green. There is a cool off from the high. We've got Mitesh back with us. Mitesh, what thoughts now and what are the trades at 10?
Good morning again, Surbhi. So two things. One, I think, we still haven't closed the gap down because the low was 24,686 and today we got a high of 24,639. And 24,625 is the 61.8% retracement area. So maybe today the market will be slightly subdued. But I do expect buying to come in at lower levels. So in case you get slightly more of a dip, let's say if the index comes down to about 540, 530 zones, I think buy there with a 70, 80 point kind of a stop loss. And we can again look at a test of 24,700. So positive view, but a mild buy on dips kind of a bias. And on the stock side, I think, I like the refineries back, HPCL, BPCL, IFC in that order. So I'll take a buy on HPCL, keep a stop at 384.5, look for targets of 410. And Metropolis is another one which is on the verge of giving a breakout. So buy here with a stop at 2095, look for targets of 2200.
Got that. Mitesh, Keytex Garments, I think the low from 230 to 360 and today is the third day. Is it taking out any levels and what would you do? It's basically back at 2017 levels.
Yeah. Prashant, I think ever since that news flow from Bangladesh happened, I think all the textile stocks have done very well. And Kitex is, in the last 4 days, literally taken off the shelf.
Numbers also, yeah.
Yeah. So, one, it's cleared a very important weekly pivot at 340, 335. So, I think the stock should see more upsides and the target which I'm looking at is around 460. Roughly another about 20-25% kind of an upside, and any declines over 340 would be good adding opportunity. So don't buy after the 58% rally which the stock has seen in the month, but slowly accumulates. If you want to buy something, let's buy 25%. You get a 15-20 point kind of a dip, add more and keep adding till you complete your quantity. And I think on the upside, you can look at a target of around 460 plus in the next 8 to 9 weeks.
All right, we'll leave it there. Mitesh, thank you very much for that. Appreciate you joining in and more later. Well, let's shift focus to the commodity space. Manisha is here with the one commodity which is top of mind for her. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at copper because after 5 weeks of constant declines, last week was one that we saw gains come in for the copper prices. Many of the industrial metals actually have started to gain up in the last 2 or 3 sessions. For copper prices, it is trading at a 2-week highs right now, and we have seen 2.5% gains in the previous week itself. When you look at the LME markets itself, we saw 8,800 as a low, but 9,100 is where copper on LME seems to be trading right now. There are various reasons for support. One, the Shanghai inventories for copper are at March lows. They are at around 262,200 tons as of now. The second point is that there are now receding fears of recession in US. We've seen most of the regional equity markets do well. So that has led to a lot of short covering in case of metal prices, and copper is one of those as well. The other thing really is about the US Fed rate cut, where the markets are now factoring in almost 100 basis point of a rate cut for the year 2024 in the calendar year, and that has been supportive. But the major factor clearly comes in from Chile, where BHP's Escondida mine is gone in for a strike, and Escondida is the world's largest copper mine. 5% of global copper comes in from Escondida. And the strike really doesn't augur so well here, because markets already are looking at a shortage of copper as we get into 2025. And this could really hamper supplies going forward. So when you look at the numbers itself, BHP has offered a bonus of around $28,000, but the workers have been asking for $35,000. This is where the whole conversation is getting stuck now. But Escondida also has a history of strikes in the past as well. The last one was 2021. There was wage negotiations, and it was just averted in time. 2017, there was 44 days of strike. 2011 saw 14 days. 2006, 26 days as well. And there was an year in between at 2015 when there was a hunger strike by the workers there. So Escondida, as I said, has a history of strikes, and that always does impact copper prices, and especially on the higher side. This is where we've seen support come in from. Having said that, there's a lot of data also coming in. And for this week, you have Bank of Korea decision coming in. Reserve Bank of Australia also is coming out with their meeting minutes. You also have China 1-year and 5-year loan prime rates coming in. And then there's inflation data from Japan and Singapore. And then the Jackson Hole meeting by the end of this week is something that the markets will be keeping an eye on.
Absolutely. Glad you brought up the history on Escondida, Manisha, because I remember every couple of years this mine will hit global headlines because of some sort of labor unrest or the other, and major disruptions, right? We hope that it all gets resolved amicably for mutual benefit for the unions and the mine operator. Thank you so much for joining in. We do have to take a break on that note, but on the other side, it's time for It's the Economy. Today, Lata will connect with Nikhil Nigania of Bernstein and Manish Gupta, senior at Crystal Ratings, to decode key trends in India's power sector.